and a very warm welcome to BNSN, the weekend edition. I'm Mubina Kapasi.
Hi everyone, I'm Avanne Dubash. Thanks so much for tuning in. Well, it's been a pretty stellar move for the Frontline Index this week, and we'll get you all of your queries answered today on the show. In fact, we've got lots lined up. We'll be first discussing your queries on Bodal Chemicals as well as Treehouse Education.
And in our portfolio segment, we'll be discussing Suresh Nair's portfolio.
Time to bring on board our experts. Gaurang Shah, VP Geojit BNP Paribas Financial Services, joins in on the fundamentals and on the technicals. Ruchit Jain, technical analyst at Equities Angel Broking. Thanks so much for being with us, gentlemen. Our first query for the day. Well, this one comes in from Vikas Luthra, and he's got shares of Bodal Chemicals. So here's his question. He's got 150 shares of Bodal Chemicals. He's bought it at a level of 92 rupees per share. His question is, should he hold and accumulate? And if he holds, what should be his short, medium and long-term target? So a very specific question that's come there on Bodal. Let's just talk a little bit about the company. They're engaged in manufacture of dyes as well as intermediaries. It's been in the news of late over the past few months, talking about how they're looking to enhance their dye stuff capacity by about 24,000 tons. Recently, also, the company received the environmental clearance for some of their expansion plans. There have been a few bulk deals as well that have taken place in the company. And also, not just that, it's also been the news of the banker's sanction as well for the release of pledged shares that took place. Nonetheless, the stock is currently trading at 106. Gaurang, a very specific question coming in from our investor here. What is the advice on Bodal Chemicals? As a stock, do you think it's one that merits a hold in the portfolio or not?
Well, Avanne, no specific coverage, so won't be comment on this particular company, but let me say about the sector. And the sector looks to be a little bit overcrowded. And given the past history and price performance and the elevated levels that we are looking at, our sense is that it is prudent to possibly take a look at some other stock investment ideas. And with that perspective in mind, I can suggest Dish TV over here with a target of 116. This is one of the largest player in the DTH segment. Their niche product HD set-top box is doing very well in the metros and tier 1, tier 2 cities. Digitization process is going on a very smooth space, and by the time we close the year 2016, there should be significant amount of progress as far as digitization process is concerned. And there is also a tailwind associated with this direct to home segment players, which comes in form of FDI getting opened up and possibly inched higher up in this sector. Now, by the virtue of being one of the largest player and of course having DTH connectivity with niche products like HD set-top box, our sense is that you are better off moving your investment into Dish TV with a target of 116. It's a very conservative target. If the numbers are better than what our estimates are, then definitely we'll revise it upwards.
Okay, that's a call coming in on Bodal Chemicals from Gaurang. He says he does not have coverage, but would advise our reviewer to go in for Dish TV and watch out for levels of close to about 116. But, coming on the technical side of the market, then, Bodal Chemicals is one stock in the last 3 months. It has rallied a good 26%. In fact, it recently touched its 52-week high after it received that environmental clearance. So, coming on the technical side of the market then, and what would you advise our viewer to do, like he mentioned, from a short-term, a medium-term and a long-term perspective?
Is in uptrend, forming this high tops and high bottom. Even if I see the weekly or the monthly charts, then this up move is definitely part of a wave 3 of an impulsive 5-wave up move. So I think upside is still there in the stock. The stock in short term could consolidate in this range of 100 to 115. So in case if he wants to add more, then it would be advisable if the stock comes around 100, he can look to add more. Keep a strict stop loss of 93 rupees in case if it's a trading position and you're looking for short term trade. On the higher side, maybe next 1.5 months after testing this 100 support of 100 zone, the stock would again move higher up to 115, where he can look to book profits from short term, whatever he has bought from short term trading perspective. So I think 100-115 would be the range, and if the stock comes to higher end of the range around 115, he can look to book profits in the stock at those levels.
Okay, that's the call coming in on Bodal Chemicals, perhaps some better options on the fundamental side. Moving on then to our next query for the day, and this one has been sent in from Arjun in Bangalore. Well, his question is that he's got 3,600 shares of Treehouse Education. He's purchased it at 81 rupees per share. He's got a time horizon of only the next 1 month and wants to know if he should hold or sell the stock. Well, it's been in the news of late and not for the right reasons, as the merger with Z-Learn, the deal has been under the regulatory glare. In fact, SEBI has been examining the delay in the transaction as well as the share sale by the promoters. Remember, this deal has been put on hold by both the companies without much details as to why the same has happened. Unfortunately, Arjun here is losing out quite a bit of money. Gaurang, I understand that it's a short-term time frame, but given the kind of news, given the way the share price has fared, what advice would you like to give our investor here? Would extending the period be a more prudent strategy, or just, booking out and putting money into another stock?
Well, first of all, keep your eyes and ears open as far as your investments are concerned. And if you see any reason for which your capital is getting eroded or getting damaged, then I think you should take proactive step. That's point number one. Point number two, don't ever overexpose yourself to a particular stock in the equity market, because that again is suicidal. Third option, well, unfortunately, like you rightly mentioned, this stock has been in the news for all the wrong reason, and we do not have any company specific coverage. But my advice is to make a shift from here. Buy Dubash Pharma for a target of 212, and definitely change your time horizon from a short to medium to long term. And by long term, it means at least a year and a half. I think you may be able to salvage some of your capital. And if you have a little bit of longish time horizon, then we are quite optimistic in terms of the results that will be coming out. And over there, we believe that with the kind of product lineup Dubash Pharma has, it will definitely stand very tall.
All right, that's a view coming in from Gaurang. He advises that you may consider Dubash Pharma as a good investment from a long-term perspective. But Richard, coming on Treehouse Education, we have seen our investors, of course, losing a significant amount of money, especially when you look at it from the time that merger announcement was made. This is, of course, the 3-month chart, a good 32% lost in over there. And in 6 months, it's been 65% of cuts coming in for Treehouse Education. Richard, what would you advise our investor? Do you think that he may just salvage his capital, whatever is left in Treehouse Education, and move out of this stock?
Yes, since it's been more than a year when the stock is continuously forming this in lower tops and low bottoms, we have not seen any kind of decent pullback move in this stock. So it clearly signifies that a minor up moves are also used by traders or investors to exit from the stock who are stuck. And it's almost trading at its all-time low levels, so technically there is no major support coming in at current juncture. It would be advisable to book the loss at current levels also and exit from the position. We are not recommending any stock from this particular site, from this similar sector, but from other sector we are quite bullish on Diwan Housing Finance from the mid-cap space. This stock has recently given a breakout from a falling trendline resistance. Also, higher top, higher bottom formation has been resumed in this stock. Recently, the volumes have also started increasing, so which shows that in case if you move out from the Treehouse and buy into Diwan Housing Finance, so you would be moving out from the stock which is in a downtrend and investing your money in some other stock which is in an uptrend. So a good amount of upside momentum could be seen even in next 3 to 4 months. We are expecting a target of 240 plus in Diwan Housing Finance. So it would be recommended to exit from the Treehouse and invest that money in Diwan Housing Finance.
Okay, that's the advice coming in. I hope you've taken note, because the stock has really been, butchered out of shape, and unfortunately, you've, invested money in this and lost out. So I hope you took heed of Gaurang's advice as well as to how you should approach some of the other stocks as well. But for now, there's Dubash Pharma or even Diwan Housing that our experts are advising you put your money in. Let's take a quick break right here on the show. Come right back. On the other side, we've got our Portfolio Advisor segment, and we'll be discussing Suresh Nair's portfolio. Stay tuned.
Welcome back. Thanks for staying with us on BNSN, the weekend edition.
Well, we've got our portfolio advisor segment lined up. Let's get straight to it. First, we'll be discussing Suresh Nair's portfolio. So let's run you through his profile. He's 39 years old. He's in the services sector and he's got 10 to 15 years. That's the time horizon. 12 stocks that he's got all in all. Thanks for sending in your portfolio. We'll certainly help you out. Let's start off by telling you what he currently holds. Banking stocks first up, and Axis Bank is in his portfolio, and he's got it at an adjusted price of about 4 rupees, close to 500 shares, I think. There's IndusInd Bank, 48 rupees, 1500 shares. Capital First on the portfolio, 300 shares at 148 rupees. Moving right on, then there's DHFL as well, 180 bucks is his buy price. Claris Life Sciences, he's got 300 shares bought at 178, pardon me. Sadbhav Engineering, 30 shares, and he's picked that up at a level of 1600 rupees. Take a look at CCL Products, that's on the list, 300 shares at 132 bucks. Syntex, 1000 shares, 80 rupees is where he's bought it at. Omkar Specialty Chemicals, 300 shares at 169 rupees. Moving on, then there's Indoco Remedies, 221 is the buy price, a total of 400 shares. There's also Mahindra CIE purchased at 178, and finally NRB Bearings, and he's bought that at 34. Gaurang, let's talk a little bit about what you make of the first 3 stocks in the portfolio. There's a lot of exposure to the mid-cap names, some bought at good prices, but a lot of them he's been caught on the wrong foot as well. So let's discuss the first 3 names. How convinced are you about Axis Bank, IndusInd Bank and Capital First?
So all 3 feature on our positive coverage, Avanne, that's a disclosure. On Axis Bank, we have a target of 611. This is a very conservative target. We are quite upbeat about the earnings season, especially for the private sector banks. And if the earnings are a shade better than what they did last time, we'll definitely revise our target upwards. So hold on to Axis Bank. On IndusInd Bank, again, Monday is the day when IndusInd Bank will deliver its number. We have no doubts, like earlier quarters and years, IndusInd Bank is likely to deliver a much better set of numbers. As of now, hold on for it on a target of 1145, which is not very far away from the current market price. But if on Monday the numbers are as good as what the bank has been delivering, we'll definitely revise the target upwards. On Capital First, again, we have a positive coverage, and the target over there is somewhere close to about 625.
Okay, those of course are some recommendations coming in. Axis Bank a hold, IndusInd Bank as well as a hold, and Capital First a hold. So all 3 of course were banking and NBFC stocks. But Gaurang, the next 3 stocks, it's DHFL, Cipla as well as Sadbhav Engineering. Clearly DHFL at 140 rupees where he may be making a tad bit of money. Claris Life Science at 178 rupees and Cipla at about 1000 odd bucks. What would you advise a viewer to do with these 3 stocks?
So on DHFL, again, we have a coverage, and our target stands at about 240-45, so hold on to it. We believe the entire HFC segment is likely to do much better with the interest rates coming down and the realty prices also being stable or in some geographies coming down. So hold on to it. That might kick off the loan book growth to a great extent. So hold on to DHFL. On Claris Life Sciences, well, unfortunately, don't have any specific coverage on this, so won't be able to comment on this one. But in case if he wants to make a switch, Cipla would be a preferred bet. After the correction post the last quarter numbers, the stock went down to somewhere close to about 460, 470, has managed to recover somewhere close to about 515, 520. We have a target of 700 on Cipla, so if you want, you can make a switch over there. On Sadbhav Engineering, I have a question in my mind and I'm not too sure. He says that he's bought it at 1600 rupees in 2010. Now, I believe there has to be some corporate announcement, either in terms of some share split, etc., which I cannot recall of. But if that is the case, then he needs to adjust the price accordingly. However, having said that, we have a coverage, and from the current market price, we have a target of somewhere close to about 340 on Sadbhav Engineering.
Okay, that's the advice coming in then on some of those stocks that Gaurang is advising. Meantime, let's talk about CCL Products. What's the advice here? Syntex Industries, just he bought it at about 80 rupees, and Omkar Specialty Chemicals losing some money here. What would you tell him to do?
So on CCL products, again, no specific coverage, but I would advise a switch to Coal India. There have been some upgrades in this particular company very recently. With coal output looking a little bit negative, we believe it's a short to medium term, negativity on the stock. It has one of the largest reserves in the world for coal, and linkages issues are getting resolved with dedicated freight corridors in perfect sync with the Railway Ministry. And we believe that the consumption of coal is also going to throw in a lot of positivity. So you can make a switch to Coal India for a target of 412. On Syntex, we have a positive coverage. Our target is 144. It may take a little bit of longish time horizon given the kind of competition at an elevated level, especially from the unorganized sector. But we believe that initiatives like Swachh Bharat Abhiyan and the sanitation drive by the Government of India should kick in a lot of positivities in terms of orders coming in. And also equally big is the replacement market. So hold on to Syntex with a target of 144. On Omkar Chemicals, again, no comments because no specific coverage. But in case if you want to make a switch, then Simplex Infra is what I would recommend for a target of 415.
Okay, those are some recommendations coming in over there. He may want to consider Coal India and Simplex Infra as buys, and he may hold on to Syntex. But moving on, let's get in a check on the next three stocks in his portfolio. It's Indocount Remedies or Indocount, Mahindra CIE, as well as NRB Bearings. He's making a good amount of money in at least in Indocount as well as NRB Bearings. Gaurang, what would you advise him to do?
So, again, when you're making money and if you given time and if the return are as per your expectation, our sense is that you should always book your profits, because eventually you are investing in the equity market so that your capital can grow. And your capital can only grow if you go on booking profits and if you have a goal in mind in terms of what kind of return you want to make on your investment. So if you want to book profits, and again on all three, unfortunately we don't have a recommendation, but I would advise a switch in case if he wants to take it, he can definitely take that switch. So on the first one, Indico Remedies, our advice would be to make a switch to Indian Bank, where we have a target of 221. On Mahindra CIE, I would advise an auto ancillary name, Bharat Forge, where we have a target of 830. There was some negativity on the numbers that Bharat Forge gave as far as their Class 8 truck chassis are concerned from the US. 38% downtick, but we believe it's a short to medium term concern, not a long term one. And on NRB Bearings, I would advise a switch to NCC for a target of 100 rupees.
There you have it. That's the advice coming in on the entire portfolio, and I hope you've taken note of all of Gaurang's chops and changes and recommendations that he's made in your portfolio. And here's an important disclaimer that please remember that this is only a model portfolio. Please do consult your individual investment advisor before taking any investment decisions. Let's slip into another break right here on the show and come right back as we get you some long-term as well as short-term trading ideas.
Welcome back. Thanks for staying with us on BNSN, the weekend edition.
Let's focus in on how the markets fared for the week gone by. And by and large, we did see a pretty stellar rally that by the end of the week sort of tempered off. It's not like we've really been reacting to any sort of news, but next week it's going to be all eyes as the earnings season will be kickstarting, and all market experts are anticipating the implementation of GST. Not to mention, of course, the global cues that we will be piggybacking on. By and large, outperformance for sure from the broader end of the market. Ruchit, let's get in a check as to what levels you're mapping out on the index for the week coming up.
So I think 8290 to 8300 is a crucial support zone for the index. Probably the higher top high bottom formation in the index is still continuing. In last 3-4 trading sessions, we have seen a sideways consolidation in the index rather than a price correction. So the index has shown a time-wise correction rather than price correction. We are expecting the extension of this up move up to 8400 in this week. So probably around 8300 one should go long in the index, keeping stop loss below 8250 for target of 8400.
Okay, that's a view coming in on the index by way of some important levels to watch out for. But Ruchit, I just wanted to get in your call as to what the advisors on the pharma sector, this one has been in the news all of this week. Do you think that it's time to perhaps enter the sector, or are you maintaining a cautious stance based on the chart patterns?
The chart patterns are looking quite positive after a corrective move of 6 to 7 months. Now the stocks have started forming higher tops and higher bottom. We can see stocks such as Lupin, Dr. Reddy, Cipla, all the heavyweights are leading this recent up move. So that's a positive sign. So definitely we are not we are not advising to go long each and every stock within the sector, but one should focus on the large cap stocks. As I said, Dr. Reddy, Cipla, and Lupin. These three stocks looks quite positive on the stock due to the formation of first higher tops and higher bottom after about 6 to 7 months of consolidation or corrective phase. So I think one should be more of a stock specific in the pharma sector and stay with the large cap stocks and look to buy on dips in these three names.
Okay, buy on dips is what Ruchit is recommending, and of course keep your focus on the large cap pharma stocks. But Gaurang, come in then on some wealth creation ideas for some investors who have a more long-term view. What stocks fundamentally look good to you?
So I think one sector which has been a bad boy of the market, Mubina, real estate. We believe that it would be extremely unfair to paint all the companies in the real estate sector with the same color and brush. There are some names that stand apart, and with that perspective, we do have a coverage on Prestige Estates. That's a disclosure. It's a Bangalore-based real estate developer. If you look at the execution run rate, it's been extremely positive for Prestige Estate, both for residential as well as commercial properties. Their debt to equity ratio is below 1, which is again a very strong signal. And the debt on the balance sheet is absolutely negligible or zero. With the kind of efforts that the government has taken in terms with respect to the real estate bill, the recent reforms in the REITs by SEBI, and of course with the consolidation that one expects in the real estate pack, we believe that this is one particular company which can definitely have a great outlook in terms of execution, in terms of acquisition of certain weak players and unorganized players, and thereby increasing the land bank. We have a target of somewhere close to about 260 on Prestige Estates with a long-term time horizon. The second one comes in from a mid-cap public sector bank. One is Union Bank of India. We've considerable amount of stress in the entire PSU bank for the last 1 or 2 quarters. We would definitely see some pain slip into the coming quarters to come by. But the efforts that have been put in and the change of rule that has come in, we believe that these are all a very strong sign for healthy balance sheets from the PSU banking lot in the quarters to come by. With that perspective, we believe Union Bank of India is a very suitable stock for a long-term investment amongst the mid-cap PSU banking lot. And over there, we have a target of 190 from a long-term point of view.
There you have it. That's recommendations coming in from a slightly long-term view. Meantime, based on the charts, what stands out, Ruchit?
Firstly, we are recommending to go long in the Reliance Industries from trading perspective. This stock of late has been more of a in a consolidation phase, and after it has recently given a breakout from a downward sloping trend line. The stock, after this last 2-3 days of corrective move, is now trading around its crucial support, which is 89 EMA and 5 EMA on the daily charts. Also, as per the time zone structure, the stock has entered a bullish time zone as per Fibonacci time series on 1st of July, which means that for the next, at least for next 34 trading sessions counting from 1st of July, the stock is there is probability of the stock being traded with a positive bias. So we are recommending clients to go long at current levels in Reliance Industries. One can keep a stop loss below 952 for target of 1042 in about 15 to 20 trading sessions. Next call is from a mid-cap space. We are recommending to go on Avanne Offshore. Usually we don't track much of the mid-cap names, but this stock specifically, since last 3-4 months of consolidation, has formed an inverted head and shoulders pattern and has given a breakout from that pattern with very good volumes. So that's a positive sign. You have after a downtrend, the stock formed a reversal pattern, and again when the breakout comes, the volumes are higher. So from trading perspective, we are expecting an up move in the stock up to 260 rupees. So one can look to buy Avanne Offshore just from short-term trading perspective. Keep a stop loss below 210 for target of 260.
Okay, those are two recommendations coming in from Ruchit. It's a buy on Avanne Offshore as well as Reliance Industries. But Gaurang and Ruchit, thank you so much for joining in on BNSN with your top technical views and recommendations. And with that, it's a wrap on this edition of BNSN, the weekend edition. From Avanne, myself and the entire team that put the show together, thanks for watching and have a lovely weekend.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.